Hi, it's Michael Farr from Farr, Miller in Washington. Today's market commentary is called Reading the Tea Leaves. There are a lot of tea leaves, bits of news that have come at us in the course of the past week that we think are significant and are sending certain messages. Fourth quarter GDP came in pretty much around average. Personal income was a bit stronger, but personal spending was not, which means that people saved. This gets us into something economists call the paradox of thrift. When individuals begin to save and repair their own balance sheets, doing the right thing for their own balance sheets, they're not out spending. And in a economy, GDP that's made up 2/3 by consumer spending, if that consumer is not spending, they're not increasing or driving an increase or expansion of the economy. So it's a paradox. What's good for the individual is not good for the economy overall. Long term, to have healthier consumers is good. So this is a short-term situation, and it is cyclical, and we're going through it now, this paradox of thrift. So we saw that the consumers are saving a little bit more. That's good. Consumer confidence was lower today, and the Case-Shiller Standard & Poor's housing report showed lower prices well below expectations in 19 out of 20 markets for the month ending in November. So we are emerging, we are recovering, but things aren't great. Last week's Federal Reserve Open Market Committee report suggesting that they would keep interest rates low not only through mid-2013 but through the end of 2014 was shocking to us. It suggests that the Federal Reserve and the Open Market Committee, as they gather economic data from around the country, is seeing a very sort of temperate, mild kind of recovery, nothing particularly robust, and they're very concerned still about the fragile nature of conditions. Fed President Charles Plosser came out today and said that they're wrong, that conditions aren't that fragile, that the recovery's better. You get too much liquidity in the system. It's like protecting your campfire with full gasoline cans. If it works, you might be in trouble. The flames start to spread and the gasoline cans are too close. The Fed's job is to pull those gasoline cans away at the right time, at the right pace, so that the prevailing winds still don't blow out the fire. We hope that they get this right because the consequences are significant. Share prices are up a great deal today, over 170 points. They were up in early market, pre-market trading on news that the Greek default, as however they're going to manage it, is going to be accomplished in something of an orderly way to allow Greece to stay somehow as a defaulter, but also still a member of the European Union. This is going to be a very tricky process. European banks are strongly leveraged, lots and lots of debt. European governments are still built, and economies are still built on a whole lot of debt right now. So world economies outside of the U.S. are also struggling. We think that the next few years could be difficult for investors, but that there are pockets of growth, real growth around the world that we look to access through multinational companies. As we look at portfolios built of diversified selections of multinational companies with strong balance sheets, good cash flow, expanding sales, decent currency adjustments, good dividends, and lower amounts of debt, we still think that playing defense while benefiting from some growth makes a great deal of sense for our clients. So the recovery is continuing. It's fragile. On February 14th, I have the great honor and pleasure of having been invited back to the University of Delaware for the 5th year in a row to be giving an economic forecast along with the president of the Philadelphia Federal Reserve Bank, Charles Plosser. He is a wonderfully brilliant man, an excellent speaker. Charlie and I did this, I think, 3 years ago for the University of Delaware. Last year, I had the honor of speaking with Fed President Jeff Lacker, who's president of the Richmond Fed. So coming up, there are still a couple of spaces available. We're happy to arrange a complimentary ticket for you through Farr, Miller in Washington. Email Tony Collelli, Collelli, C-O-L-L-E-L-I, at farmiller.com, and he'll help you out. Anyway, I'll be back soon for Farr, Miller, and Washington. I'm Michael Farr.